In this video, we take a look at Tesla's current dominance in the US, China and Europe through charts and a new research note from long-term Tesla bulls, Piper Sandler, who have a $1,350 per share price target on Tesla stock. They say a picture is worth 1,000 words. These charts must be worth millions. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. Let's jump straight into it. This is the new note from Piper Sandler. Quote, "Still firmly overweight, like your girlfriend, after studying Q1 deliveries and updated market share charts. These charts in particular will blow your fucking mind." First things first, Piper Sandler with a $1,350 per share price target on Tesla stock. Just out of interest, currently looking at earnings per share this year in 2022 of $12.26 and in 2023 of $20.26. And for the sake of comparison, my base case for Tesla 2022 EPS $13.05, and in 2023, bit more of a difference here. I'm around $25 versus about $20 for Piper Sandler. And if you don't know by now, my EPS estimates available in my Tesla valuation model exclusively on Patreon for supporters at the investor level and above. You can join Patreon with the card in the corner or the link in the pinned comment. You'll also instantly gain access to well over 100 exclusive Q&A videos, plus loads of other exclusive content and perks. So let's see what Piper Sandler have to say. It's a little bit small. Sorry, I was in the pool. You'll have to deal with it. Don't worry, I'll be reading it out, so you're not going to miss out on anything. On Saturday, Tesla reported Q1 deliveries of around 310,000 units versus consensus of 313,000. Now, as far as I know, consensus estimates were revised down, or at least the whisper number was. Obviously, the Shanghai factory shut down. People knew about this. Obviously, if the Shanghai factory is not producing and delivering vehicles for a few days in the quarter, the number's going to have to come down a little. Q1 result exceeded our estimate of 294,000 units because we assumed more severe impact from the plague, coupled with Chinese New Year and 2 fewer days in Q1 versus Q4. In our opinion, these reports are only useful when they convey something predictive about the future, and in this regard, the delivery miss isn't especially instructive. Absolutely agree. Delivery wait times are still 2 to 10 plus months depending on model and region. Tesla's market share is still rising. Also of note, production was flat quarter over quarter, a good result, all things considered. Thoughts re Q1 production and deliveries. Number 1, investors should not interpret the downside versus consensus negatively. Obviously, lots of headwinds. These things are temporary, one-off, so absolutely agree. 2, daily production rates were likely higher in Q1 versus Q4 despite more downtime. 3, specifically, Q1 production was 305,000 units, which is 3,393 units per day versus 3,324 units a day in Q4. 4, we're not sure if new factories in Berlin or Texas contributed materially to Q1 results. In my opinion, they didn't. 5, note, when Berlin and Austin start ramping, fixed cost deleverage, lower margin is most likely, obviously. 6, it is not a red flag if new, underutilized factories cause temporary margin compression, and this is an obvious point. I mean, you have to be suffering from brain damage not to understand this, but I'm sure there's going to be a few folks, especially the Tesla Q virgins out there, saying, "Oh my god, margins are collapsing," failing to account for the 2 giant multi-billion-dollar factories currently operating and starting to ramp up. Tesla's market share in the United States. Number 1, in the trailing 3 months, and please, make sure you're sitting down for this, we estimate Tesla sold about 2.7% of all new cars in the US. Now, this may not sound like a lot, but we'll talk more about this in a moment. 2, as a percentage of the luxury market, Tesla's share is much higher at about 16.5%. 3, Model 3 now represents, wait for it, about 1 in every 4 luxury sedans sold in the United States. Okay, Model 3 has about a 25% market share of luxury sedans in the US. This is a strong leading indicator for the future of Tesla vehicle sales. 4, this is around 4 times higher than the next best-selling luxury sedan, the BMW 3 Series, okay? Take a step back. Tesla has a product that's so fucking good that it, on its own, a single product, the Model 3, is selling 4 times as many units as second place in its category. 4 times as many, not 10% more, not 40% more, 4 times as many. Think about the long-term implications. 5, Model Y is also the best-selling luxury SUV in the US, with around a 12% segment share, despite the fact that it's still ramping up. Remember, what's coming out of the Austin factory when operations begin? Model Y. and another Model Y, and nothing but Model Ys for months to come. Keep a very close eye on Model Y market share and sales in the coming years, especially in the US and Europe, where there's 2 new factories that will be pumping these things out faster than you can imagine. 6. All competing EV models. I don't know if the term competing is really relevant. I mean, I don't know if you suck that hard that you're getting absolutely thrashed. Are you really competing or just embarrassing yourself? But anyway, Audi e-tron and the Ford Mark E lag Tesla considerably, and that is a massive understatement. And now onto Tesla's share in China, the world's most important market, and then we'll move on to these stunning, mind-blowing charts. 1. In China, Tesla's market share has risen to 1.8% overall and 10.9% in the luxury segment. 2. Model 3 is the 4th best-selling luxury sedan in China, an impressive achievement, understatement. 3. Luxury sedans from BMW, Mercedes and Audi were once untouchable in China. I think it's safe to say today BMW, Mercedes and Audi certainly haven't enjoyed Tesla touching them. 4. In China's more fragmented luxury SUV market, Model Y has quickly risen to number 1. This is a US brand, slaying it in China. 5. Model Y represents around 14% of all luxury SUVs sold in China. 1.6 times more than the number 2 model. Again, we're not talking about Tesla being incrementally ahead in sales volume. We are talking about a massive difference here. 1.6 times, not 16% more, not 70% more, 1.6x. This is what total domination looks like. This is what happens when you make a single category killer instead of having 720 variations of your steaming pile of excrement. It's not that hard. I don't understand why automotive companies don't get this. Just nail 1 product per category. That's all you need to do. Really, that's literally all you need to do. 10 average products is not better than having 1 exceptional product. And 6, market share is underwhelming for competing EV models. And that is an understatement. And I just quickly wanted to share Piper Sandler's revenue estimates for Tesla by year. 2022, they're looking at around $92 billion of revenue. In 2023, about $135 billion of revenue, which actually compares very closely to my own estimates and assumptions in my Tesla valuation model, which is strange to say. 9 times out of 10, when I'm reading research, notes, and estimates from the Wall Street analysts relating to Tesla, I'm scratching my head thinking, how high are these people? Every single time. Dramatically underestimating. And to be honest, this doesn't surprise me a whole lot. Alex Potter and Piper Sandler, generally speaking, have been on the money when it comes to Tesla. Not only that, but willing to actually engage with people who might be able to provide a useful perspective. We've seen Alex Potter, I think, speak to Rob from Tesla Daily multiple times. How many other Wall Street stock analysts have done that? And how many Wall Street stock analysts have learned something from Rob Mauer who haven't had the conversation with Rob Mauer? 0. So credit where it's due, Piper Sandler, generally speaking, seem to understand Tesla better than almost every other firm on Wall Street. Not that that's saying a whole lot. So they say a picture is worth 1,000 words, and as I said, I think these charts are probably worth a few million. Am I talking about words or dollars? No comment. So what we're looking at here, battery electric vehicle sales as a percent of total vehicle sales over the trailing 3 months in China, the US and Europe. Obviously the US in blue here lagging massively behind, but for what it's worth, the US now roughly where Europe was in March 2019. We're likely to see a very similar growth trajectory, the US just a few years behind. And it's worth noting here, China and Europe are actually moving together fairly closely. They look like they're almost synchronized here. Just for some context, let's count. A little bit of fun here, ready? This is March 2019, our starting position. What we're going to do is count years, ready? We're now at 1 year, March 2020. We're now at 2 years, March 2021. And now we're almost at 3 years. So in the span of about 3 years, we've seen EV market share in China and Europe increase from somewhere between 2 to 3.5, maybe almost 4% to 12, 14, 16% market share in just a few years. So the thing to do now is fire up this thing, some of that grey matter, and use it and consider, hang on, what does the future look like if this is the last few years? Seriously, take the time and do the numbers. Your brain will explode, so make sure you've got something to clean up. Now onto Tesla's market share as a percent of overall light vehicle sales over the trailing 12 months in China, the US and Europe. Let me know. Can anyone notice a trend? Spoiler alert, yeah, to the fucking moon. I mean, look at this thing, okay? I mean, I don't know how to emphasize this anymore. The trend is what matters, okay? The trend. Doesn't really matter if we're talking 0%, 1%, 2%. We have to look forward. If we go into the future, this kind of rate of growth in just a few years' time, Tesla's market share could be 5%, 8%, 12%, 15, 20, 25%. Of course, there's a limit to how much market share Tesla can obtain, and you know what the limiting factor is? How many vehicles they can make and sell. That's it. The demand's there. I'm here to tell you, in my opinion. Of course, I can't prove it and you can't disprove it, so what's the point? But I personally believe that if today Tesla had capacity to produce more than 10 million vehicles in a single year, they would sell every single one of them. Of course, they don't. They can't get the materials and they don't have the capacity yet. The point that I'm getting at here is it's very early days, and we are talking about substantial market share growth. How in the flying fuck does a company in the span of just a few years go from less than 0.5% market share in some regions around here to over 1.5%? Okay, that's a tripling in market share in just a few years. The trend, very clear, to the moon. Now onto Tesla's market share as a percent of battery electric vehicle sales over the trailing 12 months. Note the US here in blue, start of the reporting period here, around 80% market share in the US. This is absolutely insane. What product has an 80% market share? Seriously, a few years later, despite all the competition coming prematurely all over itself and embarrassingly fast, Tesla's still around a 70% market share in the US for battery electric vehicle sales. And by the way, shout out to Mary B.S. Barra and Government Motors and the corrupt president of the United States who claim that General Motors have led the way. Yeah, General Motors leading the way with an 70% market share. Yep, congratulations to GM for leading the way. Tesla's market share in Europe starting around 30%, now down to about 10, 11, 12%. But remember, this is before the Berlin factory opened, so you know what's going to happen, right? Bingo. Interestingly, in the world's most competitive electric vehicle market, China, Tesla early 2019, maybe around a 7-8% market share, springing up to over 20% briefly, coming back down, and now flattening out around 10-12%. Keep in mind, rumors plus confirmed reports, Tesla massively expanding in China as well, likely to have well in excess of 2, maybe 2.5 million units of vehicle production capacity in just a few years' time. And now onto Tesla's market share as a percent of luxury vehicle sales, which is an interesting data point, but in my opinion, people shouldn't focus too much on this, and the reason is quite simple. This is not Tesla's target market. Certainly, the price points have started in the luxury segment, but over time, Tesla continues to drive those down. Tesla isn't competing with luxury automotive manufacturers. Yes, some consumers are in a similar price range, but that's not Tesla's goal. A lot of people don't understand this. They have this idea in their mind, Tesla is a luxury vehicle manufacturer. No. They just had to start at a certain price point to drive costs down. That's how they're operating. Even so, notice the trend once again, to the moon. Tesla continuing to gain market share in this segment. Tesla beginning around 8% in the US, now over 16% of luxury vehicle sales in the United States. And in China, less than 2%, now over 10%. This is phenomenal. Second chart here, even more mind-blowing in my opinion than the first, luxury sedan sales in the United States ranking the best-selling models over the trailing 3 months. And by the way, we are talking about luxury sedans again, not electric vehicles. Electric vehicles themselves are actually highlighted here in this gold color. And we can see Tesla Model 3 towering over everything else. Model 3 trailing 3 months, we're looking at almost 40,000 vehicles sold. The next best, the BMW 3 Series, barely cracking 10,000. I mean, look at this thing visually. You got Tesla and then everyone else. It's embarrassing. As I said, this is total domination. Tesla isn't doing okay, they're not gaining some market share. They are absolutely shitting all over and embarrassing the out of everything else available in the marketplace. It gets even better. We're now looking at luxury SUVs in the United States, the best-selling EV models as a percent of the entire segment. Same fucking story. The dashed line here is Lexus in orange, Tesla's Model X doing okay but not really making a dent. Audi steaming pile of shit. I think that's the French translation for the name. Same story. Tesla's Model Y, sales begin, goes to the fucking moon, breaks through the category killer, the leader here, the Lexus RX, and now Tesla's model totally dominating. And again, look at the trend. We're not done yet. Still early days, Model Y still ramping. Remember, every single vehicle coming out of Austin, Model Y. And when does Austin start producing vehicles? Now, when the first customer deliveries begin, in a matter of days. Once again, I think things will probably look something like this. Of course, that's just my opinion. I also want to emphasize two things here. One, the Audi e-tron, which is just a literal joke. I don't know how to say it kindly. In grey here, you can barely see it. Doesn't even register because no one gives a because it can't compete with Tesla because it's not compelling enough. The Ford Mach-E, despite stealing the Mustang brand and trying to leverage that, which probably helped a tiny bit, and despite the fact that it's an okay looking vehicle and the specs aren't that bad, look what's happening here. We have an increase in sales when production commences, then things come back, then a little bit more of a bump and now down. This doesn't look good. The trend doesn't look good. Obviously things could go anywhere from here, but compare that to what happened to the Model Y, literally to the moon. It says it all, doesn't it? Feels like deja vu, doesn't it? Luxury SUVs in the United States, ranking the best-selling models, trailing 3 months. Surprise, surprise, who's number one here? You guessed it, Tesla's Model Y, which, by the way, I want to remind everybody watching, is still ramping, and again, the Austin factory. We're just getting started. Model Y already the number one selling luxury SUV in the United States by a decent margin. And note that number 2 isn't actually a specific product. It's all other models. In other words, the models that aren't individually listed here. So we can basically scratch this because this is made up of tiny slivers of market share, all irrelevant in the scheme of things. So number 2, really, the Lexus RX at 28,000 versus about 44,000 for Model Y. Again, Model Y still ramping. Lexus RX, been around a while. And the number 2 electric SUV here, the Ford Mach-E, I mean, seriously, what a joke. It's a joke. And the joke gets even funnier. Are you ready? Let's check out the e-tron. Congratulations to Audi. This was one of the vehicles, one of Tesla's so-called competitors, lauded by Tesla Q fanatics, thinking that this was the car that would absolutely kill Tesla. Didn't happen. And now onto the world's most important vehicle market, China. First, luxury sedan sales in China. We're looking at best-selling EV models as a percent of the entire segment, trailing 3 months. Tesla's Model S here doing absolutely nothing in orange. It's a high-priced car, we totally understand that. But look what happens when Tesla's Model 3 is launched. In February 2019, out of nowhere, Tesla's Model 3 sales here heading toward the moon, overtaking the BMW 5 Series briefly, then coming back, then bouncing back. Curious to note though, some of the local competition here, XPeng, can't even touch Tesla's Model 3. And remember, the Model 3 isn't the vehicle we really want to be thinking about. That's the Model Y, which we'll get to in just a moment. As we take a closer look here, the rankings of luxury sedan sales in China, we can see Tesla's Model 3, number 4, but the gap between number 1, 2, 3, and 4 is actually marginal at best. Tesla's within about 25% of number 1. The next best-selling electric vehicle, XPeng, P7, next the Zeekr 001, not even 10,000 units. And then we've got a bunch of ICE. As far as I'm concerned, all these ICE vehicles are completely irrelevant because these are dying technology. They're going to be irrelevant. No one's going to be buying them in a few years' time, so who even cares about that? And I've saved the best till last. We're looking at luxury SUV sales in China. That would be the category the Model Y belongs to. The best-selling EVs as a percent of the entire luxury SUV market. You know what we're looking for. Bam, January 2021, out of nowhere, Tesla's Model Y to the fucking moon. Number 2 best-selling vehicle in this category, Mercedes GLC in the dashed line, and then out of nowhere, January 2021, Tesla's Model Y flying past and then going on to double sales of the next best in the category out of nowhere. Note how steeply this line moves. Compare that to NIO's ES8. Did nothing. Little bit of a bump in sales and then they collapsed. Not trending in the right direction. Same with the NIO ES6. It's not really doing a whole lot. NIO's next vehicle, it's the same shit in the BMW iX3. They're a joke. They don't even register. You can barely even see these. Again, visual illustration of Tesla's dominance. And again, I want to emphasize, it's not about today, it's about the trend. From where we are today, what does the trend suggest? In my absolute favorite chart, luxury SUVs in China, ranking the best-selling models. You guessed it, that would be Tesla's Model Y, selling over 75,000 units in the quarter. Number 2, not even 50,000 again. And look at the gap here, it's enormous. We've basically got Tesla and then everybody else. This is what being in a league of your own looks like. Total domination. Check this out. The next best-selling EV in the luxury SUV category, not even at 15,000. Then we've got a couple around 7,500, another around 5,000, and a spec here, a little over 1,000. It's an absolute joke. I mean, seriously. What else is there to say? We've just seen visual evidence, proof, data, facts, some numbers here. This is no hyperbole, this isn't opinion. We're just looking at some facts showing Tesla's complete and utter total domination. Every category they enter. Doesn't matter where it is, Europe, China, the US, they dominate. Oh, and this is before the massive expansion in Shanghai. This is before the massive Berlin factory is ramped. And yes, that's right, this is also before Tesla's Austin Gigafactory begins production. If you can't read between the lines here, unlucky. Speaking of total domination, I recently got a DM from your girlfriend who was saying that she really wished you would dominate her as much as Tesla was dominating EV sales. But I definitely didn't understand what she meant, so I didn't reply. So, hope you guys and girls have enjoyed the video, and a big shout out to Alex Potter and Piper Sandler. Great research, great charts, illustrating Tesla's complete and utter dominance. And remember, they're just getting started. And finally, don't forget to join the community over on Patreon with the card in the corner or the link in the pinned comment. When you sign up, you'll gain instant access to an archive of well over 100 exclusive Q&A videos on all sorts of topics, including loads of stuff I can't discuss on YouTube or I'll literally get cancelled. And you'll also gain instant access to my Tesla price targets all the way out to 2031 and loads of other exclusive content and perks. So I'll see you over there. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.